Bitcoin's bullish weekly close, manipulation or momentum? I think we all know the answer to that. The charts reveal what's next. Hey guys, it's Keith Allen. Hope you had a great weekend. Month is off to a good start. Incredible weekly close, incredible weekly price action, weekend price action, I might add, and quite frankly, quite a bit to dive into. Before we dive in, real quickly, I want to remind you live chat is open. I always enjoy engaging with you guys, so I am going to request again, chime in if you've got insights you want to share, if you got questions you want to ask. I always enjoy engaging with you. Also, as per usual, do me a favor if you like the stream, or maybe you're brand new to it. If you like what's going on around here, do me a favor and hit that like button, hit the share button, help me grow this thing, and most importantly, make sure you hit that subscribe button up above. That's the little bell so you don't miss any of these future streams. With that, I also want to remind you, we have had just an incredible amount of alpha flowing through our Telegram channels. If you haven't visited those yet, or visited the public channel anyways, I should say, head over to the Material Indicators Telegram community. You can find the link to it both in the description of this here analysis and also on the X, formerly Twitter, page at mi_algos. You don't want to miss it. I mean, just an incredible amount. First of all, an incredible community. No moon boys, no shillers, no BS like that. Just really a great place to share insights and gain some insights. So a lot of people were protected because we have been discussing what has been developing here every step of the way. So I do encourage you to join that community if you haven't done so yet. Now for the elephant in the room. Last week, we discussed the importance of Bitcoin closing the weekly candle above the 21-week moving average. We obviously got that, but how we got it raises, in my opinion, more questions than confirmations. So, the weekend brought us, we saw price degrading last week or even earlier than that. First, a couple weeks ago, Trump talking about tariffs, and then he lifted the tariffs or postponed them, whatever. And then another announcement earlier, or I guess late last week, towards the end of the month, that tariffs would indeed get in place here effective tomorrow. And now there's some speculation on whether or not that will happen. But the real big boost, the real catalyst that developed over the weekend was a series of announcements from the First Family. And not to mention any names, but I'm just going to go ahead and show you what has developed here. And you can judge for yourself. So on the 25th, as price was degrading, Eric Trump says, buy the dips. We can all read between the lines here. We know what he means here. And then over the weekend, we get a series of posts from the president saying a U.S. crypto reserve is going to elevate this industry, blah, blah, blah. And then, goes on to say that he's got an executive order on digital assets directing the group to move forward on a crypto strategic reserve that includes XRP, SOL, and ADA. Well, this is not new news. This is just strategically timed repurposing of old news. And then I guess he probably got some noise out of that and realized he forgot to mention the two biggest assets, and really the one that he campaigned on was Bitcoin. He left those out of the first statement, so comes back later and says, and obviously Bitcoin and ETH as other valuable cryptocurrencies will be at the heart of the reserve. I also love Bitcoin and Ethereum. He puts it here as BTC and ETH and then writes it out here because he is keyword savvy. The president would be. So, yeah, and then so then Eric posts what we all knew, right? This is basically saying, he had the inside information that it was going to happen. They knew what it was going to do, and they did it. So, I guess that's the game at this point. Very simply, tank the market on policy uncertainty, pump it on strategically timed statements, and then repeat as needed. It is what it is, right? We could speculate on whether you call this, presidential power, whether it's manipulation, whether it's responsible or irresponsible use of the power in the Oval Office. None of it really matters. The good news is you don't have to play the game. The good news is you can choose to ignore the noise, and the charts are going to tell you the real story. The key resistance levels are still there. The key support levels are still there. The validations and invalidation levels are still there. And look at what is happening now. Okay. So we talked about clearing that 21, look at this candle we had last week, mind you, right? Crazy, nasty, gnarly wick. It ended up closing just 2% down, but the fact that it closed above, not only above the 21-week moving average, but above the 2025 open was a big deal. Now, just how nasty was this wick? This was a 20% candle that ended up recovering quite nicely, but it only recovered, in my opinion, as aggressively as it did because of those announcements. So it was looking good. After the close and the open, we got a new signal here. But I'll be honest with you, when signals come like this, this was not organic. So yes, this is enough to trigger a signal, but how much confidence do I have in signals when the price action that triggers them is manipulated? Because we could have things revert and do exactly the same thing that we did before. Now, before we got that manipulation, before we got this pump back up, we were anticipating a CME gap fill that came very, very close to getting completely filled. And, the fact that, and I've said this before, I'm not a gap trader, but the fact that this existed, or exists, I should say, with such close confluence to the trend line and such close confluence to the, the 200-day moving average was involved. The 50-week moving average is not too far away. All of these things made this attractive to me. And so regardless of whether this CME gap is here or not, in my opinion, this needs a retest, or at least could benefit from a retest. It gives us a confirmation, a validation that this is real. This is real support. It's going to hold. And then we have the next leg up. I had said, really through, for over a year, that this trend line is the strongest level of foundational support on the chart. So this is hands down the strongest place to bounce from. No question about it, in my opinion. So I would be very happy with a retest back down to this range. Would not concern me the least bit. And if it shot through, even overshot to the 50-week moving average, hey, no problem with that either, because look at the interactions we've had here at that level. So this is all would all be very bullish to me if we retested this and succeeded to hold support there and climb back up. Anybody who thought, okay, we got this Trump pump, there's a strategic reserve coming, again, recycled news, and oh, guys, I'm sorry if this music's been playing all along. I hope it hasn't. I got a monitor issue going on here and a new microphone coming because I bought this one last week and I hate it. So sorry about that. I apologize if that's been playing all along. Anyways, this could happen, and the evidence that it could happen has nothing to do with any announcements from the administration and everything to do with what Bitcoin needs to do, right? We've already broken down below this 21 week moving average, and we've broken below this prior level, this prior RS flip zone. So now we're going to go back and test potentially. Maybe we test this one and climb back up. Maybe we work it all the way down. Does it have to happen? Do we have to have this full flush retest this week? No, we do not. Might we? Perhaps we will. Something else, I had a conversation with somebody over the weekend about these gaps, and this obviously is a big one here. That dates all the way back to pretty much that November 5th the Trump pump. So this was basically a retrace, and really, there's still a chance that we could go down lower. We talked about this last week in the last analysis of the week last week, that this is potentially, if this doesn't hold, this full retrace down to this 69K level. That's the 2021 top. That could be, or at least for me, that's kind of my line in the sand here. I really want to see this hold when all is said and done. But with these events like this, you never know if we're going to get that flush or not. So that's kind of the risk of being involved in a market where we have this kind of behavior going on. Now, even though I just said you don't have to pay attention to the noise and the news, and you could just watch the charts. If you do play the game, just understand the risk, right? I mean, we know that they're going to continue this this kind of cycle or sequence of tanking the market and pumping on strategically timed statements as they need to do. And maybe part of the motivation is to tank the market as hard and fast as they can, so it's closer and maybe considered trailing from the prior administration, and then the Don can come in and rescue us all from the problems that he created. But I digress. So nonetheless, you just need to know, if you aped all in because of this, then you're making mistakes. You shouldn't be aping all in at any point to anything. DCA is the way. And on that note, I want to share something with you that I have shared incrementally along the way to you guys between the channels. This, I know this looks intimidating. This is a grid of MTF, mean reversion bots, and as you can see, in periods of volatility, the lower deviations get hit a lot, right? This is aggressive, and this is not what I would call optimized for the market conditions, which is why I run a grid and why I dollar cost average them together. These did reach profit, and I did close these positions on these Dev 1s. In fact, I closed the Dev 1s, I closed the Dev 2s, that's deviation 2. Deviation 3, the only one that I held is the deviation 4. That was the big dip that came down. What day? This was Friday. Okay, so I held these and I sold everything else, and now I'm doing it again. Right now we're getting more signals coming in, so I'm starting to rebuild, right, and recycling and compounding the gains I made on those earlier signals. So whether you use a mean reversion bot like ours or not, it's a great strategy. And most importantly, dollar cost averaging is really the safest way to build your positions in this volatile atmosphere. And I'll leave that thought right there. Since they mentioned all of these other assets, I thought we'd take a quick look at some of the other coins here mentioned in the strategic reserve, one of them being Ethereum, which did not get any new signals on the weekly chart. However, actually it did. As you can see down here, we have a down signal on the A1, on the trend precognition A1 algo. This is, ETH is, I gotta love hate with ETH, mostly hate with ETH, but losing this level again, not great. Let's go back to, let's take this in a little bit. All right. So the fact that ETH bounced off of this, this prior support level, and this is kind of an old RS flip zone. I'm going to turn off trend precognition here and clean this up a little bit. This is an old level of historical importance. So the fact that we came into this range, I saw that as good. I saw this as a good opportunity to pick up on a, double double bottom, basically, maybe even however many you want to count. I did pick up a little ETH here to dollar cost average and underwater position. So I'm happy with that. But this obviously we want to see hold and work its way out. And I'm not convinced yet that we are at necessarily the bottom for some of these coins, ETH included. Yes, this was a great test. And yes, yesterday was a nice 13% candle. But what happens when we have these big double digit candles? They tend to retrace, as is happening right here. Okay. So be mindful of that. Now, if you get another test down here into this box, and you see buying begin, then that's a good indication that that we're going to see some more upside here. But we've got a long way to go on ETH. Let's go to what else was mentioned? The old XRP. This one's controversial, right? There aren't a lot of people who are too happy that XRP is being included in the strategic reserve. Most when he campaigned on this, he talked about Bitcoin, and after he made it to the Oval Office, he started mentioning these other coins, and it is what it is. Again, like other things, regardless of how you feel about this asset, and that may be enough to keep you from buying it, or it may be enough to motivate you to buy more, depending on what your opinion is, what your bias is. But regardless of what your bias is, the charts don't lie, and the charts are showing us a pretty strong support above the 21-week moving average. Obviously, very strong resistance at the all-time high that we saw around the beginning of the year. Is that? Yeah, that is indeed all-time high territory. So there is definitely heavy resistance overhead, but there is some decent. And gosh, if you picked up an entry down here, fantastic. Right now, you're kind of in a dangerous spot, I would say, to be adding, because your risk reward, depending on where you think this is going, I mean, you have strong resistance at the all-time high, and you missed this opportunity down here. So from here now, let's see, from here, if you can make it to the all-time high, I guess there's a fair risk reward right there. But I would wait for things to settle down a little bit, for sure, before I aped into an XRP position. Truth be told, I'm not aping into an XRP position at all, either way. Solana, another one I have a love-hate relationship with. I've done very well on this coin at times, and I've done very poorly on this coin at times, including right now, as a matter of fact. Solana had a support test. Why isn't it showing? Oh, I want the USDT pair, and that looks better. All right, so what's to like and what's not to like about this test? Well, we were seeing Solana hold above the 618 and above the trend line, which looked pretty good, but it has since broken down through those levels, not once but twice in the past 24 hours. So it feels like it's getting close to support, but it's not quite there yet. Now, if you had picked up last week's dip, you'd be in very good shape. It went very, very deep down to a prior support level. The low last week was down at 125, and that was a great entry. If you got it, congratulations. I happened to miss that entry. I came in late, got stopped out not once but twice here in the past in the past day. So is what it is. I'm looking for another support test to see where this thing actually ends up. The fact that it is indeed making it to the strategic reserve, and I think there's also been news about a new ETF coming out mid-month on Solana, gives me some interest in it. But as we know, ETFs are not the end all to everything. I think we fell into we got lulled by the fact that the announcement on the Bitcoin ETF did so much for Bitcoin price, but we didn't see the same thing out of ETH, right? ETH has been suffering for a long time and has not really matured to the level that a lot of people had hoped. So we knew that the ETH ETF would be much smaller than the Bitcoin ETF, but it's still, in my opinion, not really performing the way that a lot of people had hoped. I personally choose to stay with the underlying assets rather than deal with the ETFs. But something that we'll be telling today is whether all these people that got shaken out over the past 10 days or so, 2 weeks really, in a Bitcoin ETF, are they going to be buying back in today? And when you see a pump like we had yesterday, right? You you got to feel for the ETF traders who can't do anything, right? They're locked out. ETFs are closed. TradFi is closed. They can't do anything until the market opens on Monday. And so when the market opens on Monday, there are many times where we see price go back and give those ETFs, those institutional investors, a chance to get back in, and that's kind of what we're seeing some of today. Again, as we look at the Bitcoin price action, dipping back down into this prior range of support. Now, we had not had any real consolidation down in this level. We had just a brief amount of consolidation in this level. And so seeing more would be, in my opinion, a good thing. As you can see, we set this level when we first started consolidating there because we needed a landing zone for Bitcoin. And quite frankly, there's not a lot of consolidation here that makes this a good landing zone. It's the trend line that makes this a good landing zone down here. It's not even a gap that makes it a good landing zone. It's the trend line that makes it that, to me, that's the most important and strongest level here on the chart, is that trend line forming technical support. So if we go through this, if we get this next retest and it breaks through here, listen, if it stays up here and we consolidate in this range for a while, that's okay. Even if we come down here and we consolidate in this range for a while, that's okay too. What you need to be cautious of is potentially breaking down below this range and then heading towards the 2021 top. We have a brief amount of consolidation here at this 75K level. So that's a possibility. I think we might have a moving average down there as well. The 50-week moving average is in that range. So that's certainly a possibility, a viable target, in my opinion. But we just have to watch and see how candles develop here, in my opinion. Back to the alts, we looked at Solana, we looked at XRP. What was the other one? ADA. Oh, here's one that I haven't touched in longer than I can remember, or even looked at it. So this is going to be live in the fire here. ADA, obviously big candle yesterday. That was, Jesus, for real, 47% on last week's candle. Unbelievable. That's remarkable. But what happens on 47% candles? They tend to retrace. Okay, so we're getting some of that, and that may mean opportunity for you. Look at where the strength was. There was a test that blasted past the 50-week moving average, almost reached 100, and recovered from there before this rally. A test back to the 50-week moving average. This was beautiful here. If you got that entry, congratulations. But guess what? It's retracing. So maybe this one comes to the 21-week moving average, which is around 83.5 cents, 84 cents almost. Or maybe it breaks through. So you have two levels here to watch. You have the 21 and the 200 and the 50. Actually, three levels, right? Could be any one of these. If you look at this progressive pattern, maybe it becomes a series of higher lows, And anything above this would be good. Anything above that 50-week moving average would play out well, probably. But gosh, look at some of these crazy moves on XRP. A coin again, excuse me, not XRP, ADA, Cardano, another coin shrouded in controversy. And here we are. It's going to the it's going to the crypto strategic reserve, it seems. So these are wild things, to be honest with you. It is hard to imagine why. Well, it's not that hard to imagine why these are getting included. We know that some of the people involved in making these decisions for the administration are heavily invested in some of these assets. So no surprise there. What will the long term be? That remains to be seen. But if the U.S. is going to start investing in these assets, that could obviously have a big impact on long-term price and growth. I think we covered a lot here today, guys. With that, I'm going to wrap it and keep an eye on what is developing out here. Real quickly, I guess we should, since we haven't done so yet, we can take a look at the order book and see what's happening here. There has been a lot of movement of liquidity over the past week, and a lot of it has been choreographed alongside these moves here. So I'm not sure who the entities are, but needless to say, what's happening in the order book is about as organic as what's happening in the news. So keep that in mind. And remember that regardless of whether we see rug pulls in here or we see liquidity suddenly appear to herd price upwards, the resistance and support levels, the validation and invalidation levels all remain intact. So be watching this, tune out that noise, focus on the charts, and hopefully you can navigate through this volatility. I expect to continue really through most of the month, if not the entire month. We have an FOMC meeting later this month, I think around the 19th. We have, I think, the Solana ETFs are supposed to start on the CME in the middle of the month. So, and obviously on Friday we have some pretty important economic data coming with our unemployment and non-farm payroll, all that stuff kind of slated here. I think that's what's coming on Friday. Non-farm payroll and unemployment coming. So those are all important things to keep an eye on. We'll have a first glimpse on Thursday. Thursday and Friday will again be important days as they will likely trigger some volatility. All right. And with that, I guess we can wrap it, leaving you with a parting shot of the order book with fire charts. And look at what happens. Whales bought over the weekend and they sold as price went up, right? They bought the dip and now they seem to be selling it. Keep an eye on things, my friends. It's going to be a spicy month.